It's Friday the 26th of September after the market close. This is a ASX200 chart. It's been a pretty rough couple of weeks on the ASX200. The whole year has really been pretty hard work. It hasn't looked very strong since this move played out toward the end of last year, which was sort of a duplicate of the move in 2012. So it sort of had it had a rising wedge pattern here, or parallel sort of channel, but that has sort of been declining strength almost on each of these tops. I guess you could say we sort of had a bit of a divergence here. It's gone to a new high, but it didn't really look very strong. And then it's really just plummeted the last few weeks along with the Australian dollar. And you can see here it's actually gone through a few key support levels. The base of this wedge here, it sliced through that, and then you've got the 200-day moving average as well, and this sort of support zone around 53.70, which had held 1, 2, 3 times, and it was there was a bit of support being found here, but today it's really gone through, and with the American market looking quite weak as well, it seems like more downside is imminent, even though it's starting to look a little bit oversold, but there still could easily be a few more days in it. I was actually expecting it to get a bit of a bounce from this sort of support zone here, and come back and maybe make sort of the right shoulder of a head and shoulders pattern was what I was looking for. Maybe not come quite back up to 5600, but sort of make it back to around this sort of 50-day moving average and then turn down again. But it's really come down a lot quicker than that. There's not a lot of support zones in between this 5300 and 5000 really. So it's looking quite bearish at the moment, and I'm just sort of staying out of it. I'm still looking at buying a couple of things, but staying out of it for the moment, and seeing where this goes, because with the possible downside for the US and international markets. This is a weekly Brent crude chart. You can see that since 2009 we've had this strong uptrend in place, and just in the last 3 months we've broken out of it. It was actually looking like it was going to break upward when this big candle here, I think, was when ISIS was starting to attack in Iraq, but it turned out to be, I guess, a false break, and it's come back down beneath. It is sort of sitting at a bit of a support zone here, at this previous low, about $97 where it is today. It's also almost completed this range here, maybe a couple more dollars to go, but for the most part it's there. I guess you could also say that this other range, there is a potential for that to play out as well, which would send it back down to around $80, but I think that if that could happen in the short term, but I think the long-term fundamentals for oil are pretty strong in my book. I think a lot of the American shale oil story is overblown, high costs and cheap debt supporting a lot of it. But if we look at a daily chart, it is showing a bit of support here with these 4 dojis in a row, which is generally a pretty good sign that it's starting to form a bottom. So I think I can't see it heading a lot lower. Small update on the gold price chart. This is a daily chart. I posted a chart on Tuesday night Australian time, and it just happened to be when this on this long wick of this candle here, and it reached about 12:30, 12:35, 12:36, and then reversed back down. Now I think I did suggest that this range here had almost played out, and it was forming a bottom, but it didn't. It's sort of, there's a lot of indecision here. We're seeing a lot of gyrations, these long wicks, and which shows some buying strength, but not. It hasn't fully reversed, so it could potentially form another leg down here. If we just look at a shorter term chart, this is an hourly chart, and you can see that this is when Janet Yellen did her speech about 2 weeks ago, or a week and a half ago, and that's exactly where it stopped on Tuesday night, Australian time. So that seems to be the short-term resistance level. So you want to see it to get above 12.35. Otherwise, it's I guess probably a better than even chance of breaking down below and testing 1200 and 1180 again. Australian dollar versus the US dollar. Going back for the last 25 years, it's a monthly chart. You can see that there's two sort of important levels here. This 80-cent level, which has been sort of a bit of a top for all the way from 1990 to 2006, and then this level here, this 96-cent level, which was the top before the financial crisis, and then acted as resistance, acted as support 3 or 4 times between 2011 and 2013 before finally breaking through halfway through last year. And since then it's sort of been range trading between 87 cents and 96. And just in the last month, obviously, it's been a really large fall of 6 cents with the iron ore price falling. If we have a look at a daily chart, you can see that fall in perspective of the last 12 to 18 months. Now it is coming into a bit of a support zone, a potential support zone here around this previous low at the start of the year, which is about 87 cents. At this point, a lot of economists were calling for 80 cents when they were giving their sort of yearly targets. Of course, they were all wrong at that exact time, and then it came back and traded up pretty strongly all year, and everyone's been calling for it to come down, and it finally has. But there's not a lot of signs of bottoming. This trend does keep going, and I guess it's partly due to the strength of the US dollar, as well as the some of the local factors like the iron ore price too. So if we could go back to the monthly, the next logical target is 80 cents if this mini support level here doesn't hold, and I think that's likely in the next 12 months. But it wouldn't surprise me for it to bounce back up off here